Well, we're excited to be here for another episode of our Beyond the Noise video series.
It's going to be great.
One of the things that we really want to talk about today has to do with the fact that SpaceX has announced that it's going public. Finally. There's been a lot of discussion and rumors surrounding that. And if we were to ask the question, what do we know? The answer is really not much
Not
at
much.
all. We're really operating off of rumors at this point. But I think it's important for us to understand what those rumors are. And essentially what we think we might know at this point is that SpaceX is targeting a listing sometime in the summer. June, July is kind of the target. And it's rumored that we should see a valuation of somewhere around $1.75 trillion.
Which is a massive
This
IPO.
is going to be a record IPO historically. And I think that's important to note that when you think about the $1.75 trillion valuation and compare that to the most recent tender offer, which was an opportunity for private holders of the stock, the kind of insiders, to sell, the valuation at that point, which was just in December of 2025, the valuation at that point was $800 billion.
That's right.
So we're talking about more than double if that ends up being the valuation. We will know more when the S1 is officially made public.
That's right. And that's usually 30, 45 days before the actual go public event. So theoretically, if we were looking at a mid-June or even a early July date, we're probably going to be looking at a mid-May to an end of May S1 public filing.
Yeah, sometime in May. And effectively what the S1 is kind of the prospectus of the IPO. IPO stands for initial public offering, the process of taking a stock or a company public and converting it into a publicly traded stock. That prospectus is going to give us details about the listing, the company,
when insiders can sell.
When insiders can sell. Lots of details about the actual transaction itself, and take it from being a rumor to actually being true and accurate and giving us real details about what's happening.
That's right.
So why are we talking about this today if all we know is rumors? Well, our Beyond the Noise video series is designed to help our clients focus on what is really important.
That's right.
And we think there's a real important story here that is being missed by a lot of people. And it has to do with indexes and index investing specifically. So I think it's important for our listeners to understand that indexes are effectively a collection of stocks that help investors track some segment of the market.
That's right.
The big indexes would be like the NASDAQ 100, the S&P 500,
the Russell 2000.
The Russell 2000. And a lot of times they're categorized by the size of the companies. The S&P 500 tends to focus on big companies, large companies. You've got Russell, which does have some larger cap indexes, but tends to be more focused on the mid and small size companies. So what's interesting is all of those indexes have rules for inclusion of new companies that come on to the market. And we have seen one particular index, NASDAQ, change their rules as to the inclusion of new entrants into the market. Talk to us a little bit about that, Josh, and what's going on here and why they might be doing that.
Yeah, so this is once again, a story that is underreported. I've only seen it in a few places, but it is completely going to change the landscape for what indexes look like, specifically with the case of SpaceX over the next 6 months. And the NASDAQ, while they're the only ones that have actually formally approved rules, the S&P 500 is also considering a change to rules as well. We don't know all the specifics, but it's supposedly going to mirror what NASDAQ has approved. So let's take a step back. Normally, if you're a company that goes public, to be included in the index, there's a process. You need to be a certain size. So like as an example, if you want to be on the S&P 500, right now you have to be roughly $22, $23 billion in size. If you're not that big, you're not even going to be considered. For the NASDAQ, it's a separate number. You have to be considered a top 100 company. You then have to go through a seasoning period, roughly 3 to 4 months at least, where you're trading. And because typically when a company goes public, what's that process look like? Yes, you have some initial interest, but you also oftentimes have private shareholders that have not been able to get out for a long time. And so oftentimes you can have a flood of people that will sell, which can cause some price volatility. And so that's part of the reason for having the seasoning, is to allow for some of that
volatility to work its way
exactly, and for us to kind of stabilize what is really a market clearing price for the company that is going public. So once that occurs, then you can be considered for inclusion. There's some other eligibility factors you have to look at, and then you ultimately get to go public. One other rule that is common is you have to have what is called 10% of float. And when I said that, most people are like, what on earth is float?
Yes.
I have no idea what that is. And to be blunt, I didn't know what it meant until about a year ago. But what float is it's the amount of shares that you have that have to be actually trading, meaning it actually is for sale. So like as an example, in a lot of cases, what happens is when a company goes public, anybody who is a private shareholder is not allowed to sell their shares for 90 to 180 days. It could be longer, it could be shorter, but that's a typical period. And so only the new shares that are being issued to raise money are the ones that are actually eligible to be sold. So in the case of SpaceX, the rumor right now is that the float would be 5%, meaning they would be issuing 5% new shares that will be diluting the existing shareholders, and they'll raise $75 billion. That $75 billion goes directly onto SpaceX's balance sheet. It's cash they can use to invest. But that's the only shares that are available, only 5% of the company.
They're raising money, so they're getting $75 billion of new money and creating 5% of new shares.
That's right.
That's happening. That's all that's traded. So when it lists, people go in and they buy these shares at the IPO. That's new shares, and they're now on the cap table. But the float in this case is only 5% of the company.
That's right, only 5%. And so the problem is, the rules before the change was you had to have 10% float, meaning 10% of your shares needed to be trading day at the point to be considered an inclusion at that point.
Specific to the NASDAQ.
That's right, specifically for the NASDAQ. So in SpaceX's case, what would that have meant? That would have meant they would have needed to go from raising $75 billion to $150 billion. Well, actually, it's maybe even more. Somewhere, but depending on what the valuation looks like, but somewhere between 150 and 175 billion dollars of capital. That's huge. It's never been done before.
Yeah.
That's not a
we're talking 75 billion right now, and that's already a
record breaking. Exactly. So SpaceX doesn't want to do that, and so the rumor that has come along is that the SpaceX executives went to NASDAQ and said, "Look, we're considering you. We're considering the New York Stock Exchange, but we don't like your rules for inclusion in the index. And so if you want a chance, you're going to need to change them." And lo and behold, they have been changed. By the way, at this point, there has not been an official declaration for which stock exchange they would go public on. So we still don't know. Is it going to be the NASDAQ or will it be the New York Stock Exchange?
Yeah, that's what a lot of people are arguing is the motivation.
Oh, exactly.
Is NASDAQ and the New York Stock Exchange primarily are competing for SpaceX's listing, which is the process of listing on an exchange, and they're choosing either the NASDAQ exchange or the New York Stock Exchange.
That's right.
And so there's an argument that these SpaceX rules, as they're colloquially being called right now, is creating a red carpet for the likes of SpaceX to list.
Exactly. And so, and to be clear, it's also not just for them. You've got some other potential blockbuster IPOs coming down the pipeline.
Yeah, right.
We've got Anthropic, we've got OpenAI, both of which would also be, while not record-setting, probably at the level that SpaceX has been, still multiple hundreds of billions, or in the case of OpenAI, probably over $1 trillion IPO. Right. And so back to the rules. So what have the rules ultimately changed to? So the rules that were approved, the first thing that you would have to do in order to qualify to be on a NASDAQ index, the NASDAQ 100, you would have to be one of the top, have to be bigger than one of the top 40 largest names in the index today. So that's the first requirement that you would have to meet. If you don't meet
that, you don't get fast entry.
That's right, exactly. And that's what this process is called, fast entry into the index. The 10% float rule mysteriously is gone. It's no longer the requirement in that case. There are some other requirements that you have to go through, but really it comes down to size and basic eligibility at that point. No float anymore, which was going to be the big issue, as well as the time requirement. Both of those are gone.
Used to be a 3 or 4 month process.
Now what it means is you got to get to day 7, and if your market capitalization still is in the top 40 and you meet the other eligibility requirements, by day 15, you get included in the index. Which that's a lot faster, and it impacts the holders of those indexes in a much more significant way.
That's right.
If we think about it, some of the key things that are the implications of that. The first one has to do with market capitalization and the fact that these are market cap weighted indexes. One last rule is that these rule changes do not impact how market capitalization and specifically the percentage of the index that SpaceX will hold is calculated. The way the rule works is for anybody who's got float, which is less than 20%, you would multiply the total amount of shares by 3 times, and that is the equivalent size of the company that they will assume. So while SpaceX today is a $1.75 trillion valuation, or at least that's the rumor, if they only float $75 billion of shares, the valuation that will be considered for the purpose of how much they get of the index will only be 3 times that 75 billion, which is $225 billion in size.
Yeah, let's talk about that a little bit more kind of from a wider perspective when it comes to indexes just in general. I think it's important for people to recognize what market cap weighting actually means.
Agreed.
So when you think about indexes, we've got lots of different indexes out there, the S&P 500, Russell 2000, Russell 1000, there's lots of different things out there, NASDAQ. All of these indexes are effectively a collection of stocks that they combine into kind of one portfolio, for lack of a better term, into an index that we can track and kind of see how that category or how the broader market is operating. All of those indexes have rules for inclusion in the index.
Correct.
And in this case, NASDAQ's changing some of those rules. But one of the key things or key components or factors that is considered when building an index is how much of the pie does one company represent?
That's right.
Are they all equally weighted? Means does everybody get the same size slice of pie? Or are they weighted higher to some companies versus others? Every index out there that is large and tracked operates from a market cap weighted index.
That's right.
Or from a market cap weighted perspective. And what that means is the bigger the size of the company, the greater the share of that index it represents. A lot of our listeners have probably heard us talk about how concentrated the S&P 500 is in the mega cap companies that are out there. If you were to look today in the S&P 500, the top 10 companies, the biggest companies, represent 40% of the index.
That's right.
So 10 companies represent 40%, 490 companies represent the other 60%.
And just to put that in plain terms, that means if an investor put $10 into the index, 4 of them would just go to the top 10 companies.
That's
it.
That's crazy.
Which, by the way, is like I think the largest amount that's been since at least 1998 at this point.
Right. So if we think about the specifics of this situation when it comes to NASDAQ's rule change, if they didn't have this market cap adjustment with the float and that last rule that you were describing there, if their market cap weighting, their market cap is $1.75 trillion, that puts them as certainly a top 10 company in terms of size. And so if they were to come in within 7 or 15 days and be added to the index at a $1.75 trillion valuation, we're suddenly getting a huge weighting.
That's right. I think the number we calculated was roughly 4.6% if they came in at that full level.
Yeah.
Right now, with the rules where it is, it should be, once again, these are approximate numbers, but somewhere between 0.65 and 0.75% of the index, roughly.
A much lower allocation.
That's right.
In that respect.
That's right. I think a couple of other things that are worth mentioning here. Why is this so significant? For anybody who uses index investing, it's crucial to understand the implications of how it's built. Yeah. Because how it's built and how companies are put in and taken out of the index will significantly impact what the performance of those indexes ultimately look like.
When you talk about index investing, think of, our listeners should understand what we're talking about there is buying an ETF or a fund.
That's right.
That simply invests in the index. Whatever the index says it includes, that's what you buy.
That's right. So another thing that is important just to recognize in this process, and once again, we're dealing with a lot of what ifs right now because the S1 is not public. But one of the things that is really important for investors just to realize at this point is that NASDAQ is rolling out the red carpet for SpaceX and ultimately for other larger IPOs here. And it's because of the profit that they can make. They make a listing fee, which isn't that much. It's like $300,000 or $400,000. But the bigger prize is the fact that when SpaceX is listed on the NASDAQ or the New York Stock Exchange, whoever is the winner, anytime someone wants to buy a share, it's going to be transacted over that exchange. If they want to buy options, it's going to be transacted over that exchange. And then, of course, not to mention the bragging rights, the prowess, and everything else that goes along with that.
With us.
That's
NASDAQ
right.
has long been known as the place that you go as an innovative company. You list with the NASDAQ.
That's right. This is another way for them to continue to bolster themselves as a competitor to the New York Stock Exchange. So the other thing just to recognize here, though, is, at least in my opinion, I think that the NASDAQ, to some extent, is throwing its investors under the bus. Why? Because if SpaceX does go public, and at this point it will meet the eligibility requirements, it hits the index day 15 from the point that it goes public. At that point, we have not gotten, most likely, and this is the part we don't know from the S1, when do the private shareholders get to sell? Is it immediately? It's unlikely, but it's possible. Is it 90 days? Is it 180 days out?
Traditionally, it's 90 to 180 days.
It usually is. So the point is this: most likely, if that does remain true, then SpaceX goes public. You don't have a substantial amount of people selling, and what do you have? You got pent up demand to buy, which probably pushes the stock, or has at least the potential to push the stock price higher. It goes public on the index, which adds additional buyers. We did some basic calculations. If you look at all the major NASDAQ 100 index funds, there's about $560 billion of them right now. So even at a 0.65, 0.75 kind of weighting, that's $4 to $5 billion of purchases right there.
It's forced. It has to happen.
Yes, the moment it happens, those funds automatically buy SpaceX at that point in time. We've not had a seasoning. We've not allowed the insiders who want to sell, once it happens to sell, we've allowed the price most likely to probably move up in that situation. And so when the 90, 180 day mark comes, guess what happens? The private shareholders now get to sell to investors that have, there's at least a decent chance, push the price up in a big way, and it ultimately hurts them. And the winners in that kind of a play out situation is the SpaceX private investors. In that situation,
they've basically gotten a chance to sell their shares at the highest possible price.
Yeah, and it may not be the highest possible price. I mean, theoretically, it could still continue to move forward if you have a large enough demand. But at the very minimum, that's the whole point of the seasoning process. The point of the seasoning process is to make sure that the risk of the going public process is on the backs of the private investors who invested from the beginning, not on the back of the index investors who will ultimately get to buy it after that process goes through. And what NASDAQ is doing is they are taking away that seasoning process.
That's right. Yeah, which has real implications for index investors. And I think that's one of the big takeaways we have for our listeners today is if you are an index investor, you need to recognize how these things are built and when rules change, and how that's going to ultimately impact you. Because if you are an investor, say in a NASDAQ index fund, you got to recognize that 15 days after SpaceX goes public, most likely, you're going to see an addition of SpaceX to your index fund. Is that what you want? Maybe, maybe not. But you need to recognize how that works. I think another thing, and you were getting to this a little bit, Josh, has to do with much further down the road. If it is 90 to 180 days out, one of the nuances of the rule that we didn't really get into is the point at which SpaceX's float goes from less than 20% to more than 20%.
Yeah.
Talk to us a little bit about what happens there and why that's important to understand.
Yeah, so the rule is at the point, the 3 times the float rule stops at the point that you hit 20%.
Okay.
Once you go above 20%, you count the entire market capitalization of the company.
Okay.
So today, once again, at 5% multiplied times 3, that means $225 billion is the equivalent market cap that NASDAQ will look at when they determine how much of the pie SpaceX gets on the NASDAQ 100. The moment you cross over 20%, if you get the full value, you go from the $225 billion to the full whatever the value is at that time, probably in excess of $1.75 trillion.
It's been proven up, yeah.
And at that point, what happens? You literally will see the inclusion, at this point, at least based on today's prices, you could see the percentage of the NASDAQ 100 go from 0.65 to 0.75 up to 4.5% plus.
And this is dependent on how big the float is. And the float will increase as more insider investors or private owners end up deciding to sell their shares.
Or being able to. Honestly, and once again, this is where we start to get a little bit into speculation here, but this is where if you had a staged process where people could get out in stages, that would honestly be the most concerning. Because if you happen to get the float up above 20%, but you didn't unlock the floodgates for all shareholders to sell, you could trigger the point where you get a bigger inclusion in the index before you get the mass selling that takes place at that point, which I think is once again, we don't know what's going to happen, but that is a risk that is run in that case.
That's the speculation or the the interesting factor here is that once we hit that 20% mark, it becomes a much bigger part of the index. Does that happen 3 to 6 months out? Maybe, maybe not. We'll have to see how much actually becomes released and what the details are in the S1. But I think the big thing for our listeners to take away from this conversation is, first, NASDAQ, S&P 500, all of them, they're not charities. They aren't operating necessarily with just, we want to put these indexes together for the good of the people. They're companies.
Yeah.
They're looking to make money. And in this case, we're seeing the NASDAQ have some incentives to make some changes in order to drive business their direction.
And I think probably the other big thing that we'd really encourage investors to keep an eye on is what happens with the S&P 500.
Yes.
At this point, they have proposed rule changes. They're confidential, so none of the specifics have been released, with the exception of the fact that we know that it is a similar framework to NASDAQ. If they normally, with the S&P 500, they've got a 12-month wait
Right.
and before they can be included at that point. And so if that ultimately gets approved as well, and especially if it's before the go public, then that makes this an even more significant conversation, because the S&P 500 index funds are much larger in terms of what they hold compared to the NASDAQ ones.
Billion, it's trillions.
It's trillions of dollars.
Right.
Exactly.
Right. And if we talk about 40% of the index being included or being represented by those top 10 companies, it will become one of those top 10 companies, assuming that its full market cap is
considered at that point
in the way.
Exactly. We'll have to see. What happens.
It will be interesting to see how the rest of this year develops.
For sure.